Did you know that getting the best interest rate makes all the difference in terms of you being able to afford your bond and you not affording your bond? Actually, if you get the best interest rate, it means that you get the lowest installment and vice versa. Do you want to actually find out what are the ways in which you can actually secure for yourself the best interest rate? So, but before we get to that, in this channel, as you know, we talk all things real estate, all things personal finance, so that you are the driver of a professional life, not just the passenger. So let's get to it, shall we? So the first thing to actually ask yourself is, how do actually banks determine your interest rate? Right? So what you need to know, the first thing is that the South African Reserve Bank sets what is called the repo rate. Right? So the repo rate is actually the interest rate in which the Reserve Bank charges other banks or commercial banks like Standard Bank, FNB, Nedbank, and ABSA, right? So they charge them a specific percentage when they lend money to them. Like, for example, if we are talking about the current repo rate at this point in time is 8.25, right? So the repo rate then sets the basis of all the other interest rate, right? So, and then the bank, when they charge the end user or the consumers, right, they charge them what is called the prime interest rate, right, which the basis of that is being set by what is called the repo rate, right? So the bank will charge you either below or above the prime. In most cases, it's prime minus 1 plus 1, depending on the credit profile of that applicant, right? So which bank actually gives you the best interest rate in terms of home loan, right? So that's very much important for you to know. But the reality is that the interest rate that are offered to clients, they vary depending on the circumstances of that applicant and the criteria that the bank uses, because all the banks don't necessarily use the same criteria when they loan you money. So that's why you actually need to apply to all the banks, and this is where a bond originator actually assists in order to get you the best interest rate and to get some sort of competition within the banks and giving you the negotiation ability, right? So it's very much important. So it is very also much important to note that the financial situation of the applicant plays a very, very critical part. And it is very difficult to say which bank offers actually the best interest rate, because it depends on the applicant, right? Like I said, you need to use the bond originators, because that actually gives you a chance, because the bond originators, what they will do is that they will apply to all the banks. Even when all the banks are using different criteria, you might find that one bank will decline you, one bank will approve you, one bank will give you the worst interest rate, and one bank will give you the best interest rate. So that's why it's very much important, right? So what are the things that you need to do to increase your chances of getting a better interest rate, right? So like I said, interest rate vary largely depending on the financial circumstances of the applicant, and depending on the financial institutions criteria in terms of what are they looking at in terms of offering that bond, right? So these are the things, right, that you need to be aware of. But basically, the fact of the matter is, or the reality of the matter is, the less of a risk the bank perceives you to be, right, the better the chances of you securing the lowest interest rate or the best interest rate. But if you are perceived to be a higher risk, then it means the bank will actually offer you a much higher interest rate, right? So it is very much important to know debt, right? And it means that you need to work on yourself to showing the bank that you are actually not a high risk person, right? So before I even continue to go forward, right? In this channel, we empower you. We empower you to be financially independent. We empower you in terms of real estate knowledge so that it helps you to improve your financial life in some way, right? So please do subscribe to this channel so that more people can be exposed to this content, and share this content with your family, with your friends, and with other people that you think it will really help, because for sure it will really help them. And I appreciate you for subscribing. Thank you. But let's continue, right? Let's continue with this issue. Okay, so here are the factors that we're going to discuss that are in your hands, right? That you can control to ensure that the bank perceive you as a low risk applicant, which is very, very much important, right? So the first thing is that you need to be paying off your debt, right? So whatever debt that you have, ensure that you pay off your debt. You are contributing towards ensuring that you pay off your debt, right? And you need to pay your bills on time, right? That shows that you are someone that is dependable and reliable, so you are low risk. So it is very much important that you pay your bills on time, regularly, and in full, not paying half there, because that will show that you are actually a high risk, and the bank does not want to take the risk on you. They want to be sure, guaranteed that they're going to get their money back. All right. So another thing is that you need to avoid owing more than a third of your gross income, right, on a debt. So basically, you need to ensure that your debt are not exceeding 30% of your gross, so that they give you the good interest rate. So the amount, the maximum threshold that the bank can give you is 30%. In terms of a home loan, is 30% of your gross salary. So they cannot give you more than that. So if you actually show a good affordability that the home loan that you are actually maybe applying for is 15% of your gross, 20% of your gross, then it shows that you will be a low risk person, right? And then if you have maybe smaller accounts, or maybe accounts that you have been having for long, close them up, right? Close them up, and when you close them up and you close the balance, it really counts in your favor, because it indicates that you have the ability to start a debt and then close it up. So the bank perceives you in that scenario as someone who is a low risk, because you have shown the ability to circle your debt and close up your debt, right? And the other thing that is very much important is to do a pre-qualification. So a pre-qualification will help you to determine what you have to fix before you can actually apply for a home loan. Then you give yourself a chance to get a higher, so a better interest rate. So it's very much important. Then you just take the time, whatever that is wrong, you fix it. Then when you fix it, when the time has come that you have fixed everything and your credit score has improved, then you can now apply for your home loan. But there's one much very important question that I want to close this session with of this week, is that can you get the best deal directly from your bank? Can you? The answer, guess the answer. What is the answer? Guess it. Guess what is the answer? The answer is definitely no. There's no way you'll get the best deal from a bank that you've applied directly for yourself and you apply just one bank, right? Because there's no way to actually compare if that is actually the best deal. Remember in the beginning I said banks uses different criteria. So if you are just applying to one bank, right, they don't have your interest at heart, right? So they're not gonna give you the best interest rate unless if you force them to do it, because you need now to apply to all the different banks and see which bank is giving you the lowest interest rate, and then negotiate with the bank of interest that you want actually for them to give you your bond, so that maybe you enjoy working with them, or you have a good relationship with them, or whatever. Maybe all some other accounts that you are doing are with them. Then you negotiate with them to even beat the other one. Then you give yourself some negotiating power. But let's say you applied for the one bank. If they decline you, what else, what happens then? What happens then? You will have to wait for your circumstances to change, and the house that you want to buy might no longer be available at that time. So rather, from the beginning, just apply with all the banks to give yourself a better chance of getting approval, right? So we close it here for this week's session. I hope I've added some value into your financial life, into your property life. I hope this actually helps you. But don't forget to subscribe, to share with your friends. I will see you on the next one. Cheers. It is the Big Elephant signing out.